You've probably heard of an infinite money glitch in video games, right? Well, what if I told you a real-world version exists? Today, we're going to dive into this absolutely fascinating and super controversial financial machine built by Michael Saylor and his company, Strategy. Their goal? To buy up Bitcoin on a scale nobody has ever seen before. It's a bold, wild ride, and we're going to break down exactly how this thing works. So the guy behind it all, Michael Saylor, he doesn't call it an infinite money glitch, of course. He calls it, get this, a quadratically reflexive engineered instrument. Yeah, I know, it sounds ridiculously complicated, and that's kind of the point. But don't worry, we're going to unpack what that actually means piece by piece. All right, so here's the game plan. First up, we'll meet the man and the machine. Then we'll get into how this whole flywheel actually spins and how it's fueled. After that, we'll check out the arguments for and against it, the bull and the bear cases, and wrap up with what this means for the rest of the crypto world. Let's get into it. Okay, so let's meet the architect of this whole thing. That's Michael Saylor, the CEO of MicroStrategy. Now, for years, his company was just, a pretty normal software business. But then Saylor made this massive pivot. He basically turned the entire company into what he calls a Bitcoin treasury company. Their one and only mission? Buy as much Bitcoin as humanly possible. And when I say their mission, I mean they are relentless. They started buying back in August 2020 and just never stopped. They bought when the market was up, they bought when it was down. It didn't matter. They just kept accelerating. It all led to them officially rebranding and announcing this insane plan to raise billions and billions more, all just to buy more Bitcoin. Their commitment is frankly off the charts. So the big question is, where does all this money come from? Well, this is where things get really interesting. This is where the magic, or maybe the madness, depending on how you look at it, really kicks in. We're about to look under the hood at the core engine of this machine, what's called the flywheel. Okay, so this whole system runs on one key ingredient. It's called a net asset value premium, or NAV premium. Look, all that means is that for some reason, investors are willing to pay more for a share of the company's stock than the Bitcoin it actually holds is worth. At one point, the stock was trading at more than 3 times the value of its Bitcoin. That premium, that's the secret sauce. That's what makes everything else possible. And here's how they turn that premium into a weapon. It's this simple but incredibly powerful 5-step loop. Step 1, they sell their own stock at that higher premium price. Step 2, they take that cash and go buy Bitcoin at the normal market price. Now, here's the genius of it. Step 3, this move actually increases the amount of Bitcoin behind each share. So what happens? The market loves it, which helps keep that premium alive. And that lets them do the whole thing all over again. It just feeds on itself. And this isn't just theory. You can see it right here. Just look at this chart. The gray line, that's the price of Bitcoin. The green line, that's the value of the company. See that huge gap where the green line just takes off, way above the gray one? That is the premium. That's the flywheel in action, right there on the screen. But wait, it gets even more complex. Selling stock is just part 1. To really make this thing a monster, Saylor built a much more sophisticated machine. He figured out how to tap into all the different pools of money on Wall Street by creating different financial products for different kinds of investors. It's actually pretty brilliant. He realized Wall Street basically wants 2 things: crazy volatility and steady income. So for the hedge funds who love to gamble on big price swings, he gives them one thing. And for the more conservative folks who just want a nice, steady paycheck, he gives them something else entirely. Let's break down these 2 parts. Okay, so first up are the hedge funds. For them, the company issues these things called zero-coupon convertible bonds. That's just a fancy way of saying they get billions of dollars in loans that they pay 0 interest on. It's basically free money. So why would a hedge fund do that? Well, they're not in it for the interest. They're using these bonds to make complicated bets on the stock's insane volatility. So they get to play their games, and in return, Saylor gets a giant pile of free cash to buy more Bitcoin. Then you've got the other side of the coin. To bring in the more conservative money, they offer something totally different: high-yield preferred stock. This thing is designed for people who just want income. It pays a huge dividend, something like 11.5%, and it's built to be stable. You can almost think of it like a supercharged savings account, only instead of being backed by the bank, it's backed by all that Bitcoin they own. So let's put it all together. You've got the regular stock for people who want growth. You've got the convertible bonds for the hedge funds who want to play with volatility, and you've got the preferred stock for people who just want a steady dividend. It's this 3-part strategy to pull in cash from literally every corner of the financial world. And every single dollar goes to one thing: feeding the machine. Okay, so all of this brings us to the billion-dollar question, right? Is this whole thing a work of absolute genius, or is it completely insane? The financial world is totally split on this, so let's dig into both sides of the argument. All right, on the one hand, you have the bulls. They say, look, this company is a massive, constant buyer of Bitcoin. They don't panic sell, they just buy, which soaks up supply and supports the price. They basically see it as a turbocharger for Bitcoin. But then you have the bears. And they're saying, well, hold on. They see something that looks a lot like a house of cards, maybe even a Ponzi scheme, that needs a constant flow of new money to stay afloat. They worry about what happens if the price drops, and they point out the huge irony of taking a decentralized asset and piling it all up inside one single company. And to really understand the bull argument, you have to wrap your head around this one stat. In 2025, this one company was buying Bitcoin so fast that they were acquiring more than 100% of all the new Bitcoin being mined in the entire world. Let that sink in. A single company was buying up the entire new global supply. And then some. That's just incredible. But, and this is a huge but, the bears point to the Achilles heel of this whole strategy. The entire thing only works as long as new money keeps coming in and the price of Bitcoin keeps going up. If that ever stops, or worse, reverses, that flywheel can spin backwards, and that could trigger a complete meltdown, a downward spiral that just feeds on itself. So this isn't just a story about one company anymore. Of course not. People saw how successful this was, and now this infinite money glitch playbook is starting to get copied, and that's creating some pretty big waves across the whole crypto market. And yep, you guessed it, we're seeing copycats pop up. New companies are trying to do the exact same thing, not just with Bitcoin, but with other coins like Ethereum and Solana. The really scary part, though? Critics argue that these copycat flywheels are way more fragile. They're built on newer, less proven assets, which makes them even riskier than the original. So if you hold Bitcoin, what does all this mean for you? Well, it's really a double-edged sword. On the one hand, you have this massive buyer supporting the price, which is great in the short term. But on the other hand, it's introducing a whole new kind of risk into the system, a centralized risk that's built on a ton of debt, right in the middle of an ecosystem that's supposed to be decentralized. And that leaves us with the ultimate question. Is this so-called infinite money glitch the turbocharger that's going to launch Bitcoin into the mainstream for good? Or is it a giant time bomb, just sitting there, ticking away at the center of the market, waiting to go off? I guess we're all going to find out.